Well, what do you say we get you updated on our ag commodity trade? I'm Marlon Bowling with you, and let's take a look at our quotes provided by Bar Chart when it comes to corn. Well, on the corn market, we opened up under pressure today. We have come off of our earlier lows a little bit. We have March corn still lower, but it's down only 2.5 cents now at $6.51 per bushel, just kind of drifting around here. In the soybean trade, we are now a little bit higher. We'll go with January 2.5 higher, the March 1 3/4 higher at 14.86 1/4. So again, just not much movement at all in this soybean trade here today, as opposed to what we have seen the last couple of weeks. Now, when you look at the wheat market in Chicago, we're down a little bit. We have March down 6 3/4 at 7.44 per bushel. On the Kansas City hard red wheat, we have March down 20 at 8.45 1/4. They're really picking on that one for some reason today. In spring wheat in Minneapolis, March is down 8 1/4 cents at 9.14 per bushel. On the March cotton, we're now down 22 points at 81.41 per pound. We had been a little bit higher earlier this morning. We're joined by Todd Bubba Horwitz of BubbaTrading.com. He is based in Chicago, but he's in Las Vegas today. And Todd, thanks for joining us here as we take a look at the markets. And I can't find any real sense of direction going on in the commodity trade here today. Is this what you call the pre-holiday doldrums going on, or what?
Unfortunately, Marlon, we've been in the pre-holiday doldrums for about 3 months now. There's just not much happening. I mean, you've got all kinds of things that we can look at, but the bottom line is that the inflation is rising, and the cost of grains and goods are not rising along with it. And there's a lot of issues out there that we have to address. And, it's interesting how prices remain low when you have a basic shortage in food and a basic shortage of supply. But again, when you have no volume and you have no overall interest in the markets, it makes it much easier for the big money banks and funds to kind of put a little pressure on these, which is, I think they're actually accumulating them myself, if I were to guess. And I think that, in 2023, I think we're going to have a big bull market in commodities as money will start to come out of equities. We've got the Fed today. We've got a whole bunch of issues around, but the real problem is that we have a true lack of volume and a true lack of liquidity in all markets across the board.
So speaking of those funds, they have so much money to throw around. Typically, after the first of the year, are they on a buying spree or not, or does that matter at all?
Well, it depends on what they may be buying. I mean, last year, first quarter was pretty dramatically down for equities, and it was reasonable for the grain markets. And I would expect that, I don't really know what's holding up the overall equity markets here in general. We're seeing a collapse in many different areas, housing markets and things like that. The higher interest rates are not a benefit to anybody, but they're going to continue to go higher. And I would suspect the Fed, they're expecting 50 basis points today. I would think it would be good for commodities, and I think the volumes will come back, and I think it's going to be bad for equities.
So the Dow Jones Industrial Average is up 183 points right now. The December U.S. dollar index futures are down 163 points. And as far as our West Texas Intermediate crude market, I understand that the trade was thinking that we would have the actual stocks on crude oil going down 3.5 million barrels this week. Instead, they came out up 10.2 million barrels. Oops, they kind of missed the mark on that one. But yet, we're still trading higher. January up 128 right now at 76.67 a barrel. Okay, we'll come back in a moment, and we'll talk more with Todd Bubba Horwitz, and we'll take a look at our livestock trade on a Wednesday right after this. Well, we are back, and we're talking with Todd Bubba Horwitz of BubbaTrading.com. Let's shift gears, and let's take a look at what's going on in our livestock trade here at midweek, shall we? We'll go to the live cattle board, and our quotes are provided by Bar Chart here. February is trading 20 cents lower now at 156.15. We got as low as 155.62 before it bounced today. So now we're off of that by about $0.50. We're still about 35 cents away from our high that was made earlier this morning. Now on the feeders, you have the January 20 cents higher at 184.42, and you have the March 7 higher at 185.80. Well, that's 15 cents from our high of the day, but it's You know, all things considered, March feeders have a very narrow trading range today. Only, 65 cents from the high to the low. That's kind of rare. Now, if you look at the lean hogs, you have February down 70 cents. We're at 83.87 after hitting a high right near the open of $85, and then it fell quickly down to 83.15, and now we're about halfway back again. But volatility in this lean hog market here, I assume maybe the trade is also a little nervous about what China may do for demand for lean hogs here, Todd. They either buy a bunch of pork or they're absent from the market. It seems like it comes and goes.
Well, again, I'll look at it from this point of view, Marlon. I think that the livestock markets, the protein complex, is really very neutral. And if crude oil goes higher, it's more bullish for hogs, and if crude oil goes lower, it's more bullish for cattle. And I think we've been in this winding range for months, and I think it's only based on basically the budget and what people are going to do. I think it has nothing to do with China. I mean, listen, China owns one of our companies, which is the biggest hog producer in the world, is Smithfield. So, again, I think we're looking at basically a budget and basically looking at what can the consumer afford, and with higher crude prices, they're going to buy a little cheaper protein, and that would be to the hog market. I mean, think about it. When's the last time you saw December hogs at 85 cents? Okay, so it's always interesting to watch, but I think they look good. I don't think there's a lot of room to go up. I just don't think there's a lot of room to go down either.
And on the cash cattle trade today, I did not see any activity going on yet out in the plains. I checked the wire. Looks like they're still asking about 156 to 158 today, so nothing shaking loose yet, at least this far in the week. Todd, good to talk with you again. Todd Bubba Horowitz of BubbaTrading.com with us from Las Vegas today. Janet, back to you.